Howdy, everyone. It's Joe Gill with My Phoenix Real Estate in Keller Williams, Arizona. If you're watching this at the stats class, I'm taking the GRI class. Today's the first class of the set, so I couldn't make it to our normal Tuesday. If you're watching this on YouTube, this is just one of our normal monthly or sometimes every couple of months video just reviewing real estate stats in the Phoenix Metro, just watching these patterns and kind of get an understanding of what we should be expecting. So I will get right into it. We were expecting some changes and we've already started to see them happen. Just actually not to the degree that I thought we would. So our active listings, this is like your toilet paper on the shelf at Costco. You can go in and buy it anytime. Our active listings have crept up, which is a little bit different than some of our past few years. You can see 20, 21, 22, 23. Those all were, kind of flat and then into decline. We've got a few months of growth here, and it looks like we're still on that upward trend, even if it's only by one or 200 listings per week. So our listings are continuing to climb up. I think a lot of this, well, some of it's due to new listings, but we've also got a slight reduction in the number of canceled listings from December. So typically we'll see um, listing contracts cancel at the end of the year. Some this time we're watching them creep back into January and kind of hang on the market for a little bit longer. Our new listings are up. So this, even though we're in February, sometimes this number will still update. So I'm guessing we're going to be closer to 9,000, maybe 8,500. But either way, that's a bigger jump from last year. So last year, 23, January of 23, we had 7,500. Right now we're tracking just under 8,200, but I predict it'll be between 8,500 and 9,000, which is a pretty significant amount, especially if we get up to January 21 and 22 levels. Because remember, January 21 and 22, no correction had started to set in yet. We were still kind of flying high from the post-COVID low interest rate environment. Um, Now, if you look at October, this is the first month of last year where we finally loaded more listings on than we had the previous year, right? So if you look at 2022 as sort of the corrective year, you can see in green, we just started to, everybody was like, get your listings online now because the bottom's dropping out. And at the same time, we had fewer agents or fewer buyers coming to the market. So anyway, we finally caught up with that in October and eclipsed it by, less than 100 looks like. And then we've just been growing and sort of beating the previous year's numbers by a little bit as we go. I expect that we'll see that on through the rest of this year. So my gut tells me that, 7,500, 8,000. My gut tells me that we're going to beat these 23 numbers this year for a little while at least. Um, Under contract, we're kind of languishing a little bit. Oopsie daisy. We were following that trend and then we dipped this past week. We're at 7,000. Now, that's not to say that there's an issue, I guess. If you draw a line straight up and down, you see that there's sort of this seasonal dip in some past months anyway, and then after that, you get a rise in your number of contracts. That could be because the mix of homes that went under contract at the beginning of the month and in December, they're trying to get it closed before January 31st. Once they do that, all those things close out, and now we've got just the ones that are under contract in February. So it could be that. We'll just have to see. If you follow our Facebook page, next week, next Monday or Tuesday, I'll post up what that under contract number looks like and see, are we rising? Are we going to follow that seasonal pattern, or are we actually looking to decline compared to last year? We will see. Quickly, we'll talk about contract ratio. The awesome thing about this measure is that it's sort of immediate. It's a snapshot of right now. It's not a lagging indicator. It's not a week old, a month old, or whatever. It's what's happening right now. So this is the number. Anything under contract, you divide it by all of the active and coming soon, and that gives you this specific number, and that gives you a general idea of the relationship of supply and demand. So you can do this across the metro. You can also do this in a neighborhood. You can do this in a zip code. You can do this in a city. This just gives you a general measurement. So here's what it looks like on paper. Luckily, Tina Tambor has sort of given us a guide on the left side. You got a cool market, warm market really starts around, I don't know, 30. Hot market begins right around, looks like 60. And then you jump into a frenzy once you get into the 80s. So take a look at last year. This is 2023. This is what you see if the market was normal. Like take out the past few years, this is a relatively normal cycle. See it rise up in the spring, and then summer it starts to taper down a little bit. Fall it gets a little bit quiet, and then it'll pick back up the next year. So we are following that same pattern. You know, we started I don't know, in the 34s, 34.4. Now we've climbed up to 47.7, which is a pretty comfortable position to be in. I would say if we hung out at 50 for a while through this spring, that'd be a pretty comfortable place. We wouldn't have multiple offers. We wouldn't be, spiking the interest prices and things like that. It would just be a place where both sides can kind of play and be happy. Um, Last year we were at 52.3, so I feel like we're a little bit behind, simply because I think we've got more sellers coming out of the woodwork, and we're just a little bit behind the contract numbers that we had last year. You remember we started to dip away from that line, so we'll watch this number. But I imagine that 47.7. I imagine that we're in the low 50s by let's call it middle of February. Hopefully, we can be in the high 50s by March or April, but we shall see. So we'll watch that number pretty close too. Cromford Market Index, this is our forward-looking index. So the contract ratio, that's two numbers. That's it, super raw, moment in time. That is a data point. That's a statistic. Cromford Market Index, this is an index that takes multiple pieces of information and compiles them to sort of paint a picture and tell us where we're headed. So 2022, that was the corrective year. We came flying down to a balanced market. 2023 is in pink. You see it start at 100. We go up, and actually we had a pretty strong seller's market. You know, we had multiple offers into June and July. It was getting um, pretty cooking pretty hot, and then it cooled off again because we got to, like, I don't know, 8% for interest rates. So that cooled it off, got us back into a balanced market. So this is what the pink line is yet last year, right? We were free falling, and then we started to break away. Uh-oh, hang on. And then I called this we finally dipped out of that. And I mean, that was a sharp recovery. We stopped dead before we hit 100. But now we climbed and we're starting to flatten out pretty quickly. So the first 5 weeks, that's a fairly sharp turn. Are we going to draw and sort of hover this line throughout the year? Maybe. Is this going to turn back around and just be a little bit of a turn? Maybe. Is it going to go back down and take us back towards a more balanced market? Maybe. I mean, I know the Fed is kind of, now that we have a lot more information and people are paying attention, the interest rates will basically move before the news even happens, right? So we're jumping the gun on all these changes in the first place. So now if the Fed says, you know what, we're going to be a little bit more conservative, I'm not sure if we're going to do rate drops, then that has essentially a negative effect. So that actually might start dropping that down. That's good for any buyers that are hanging on, wanting to get something under contract. This means that, they're looking at a little bit less competition. Um, for sellers, it just means make sure your strategy is just dialed in. Make sure that your agent is good, like me, and like Chris, and have a plan and understand how to read the writing on the wall so that you can position yourself in the right way to sell. Make sure you're not leaving any money on the table. Make sure that you're not, languishing on the market for multiple days. Um, when you look at it from the big picture, 2021 was cuckoo up in the 400. That doesn't even seem real, like up in the 500s. I mean, I remember it was crazy. But look down here, we've got more normalcy. So if you see in 2019, we started at a pretty good clip, but then it sort of got weaker into February and March, and then in March it picked back up, and then we were headed toward a really strong market anyway. So we were getting pretty close to 200. Then we hit the pandemic. Everybody stepped on the brakes. Then they reduced the cost of borrowing money, and then y'all remember what happened after that. I know you do. Um, take a look at this month and last month. So we're still talking about the Cromford Market Index. This is a bunch of data points compiled together to tell the story. Last month, Chandler was all the way at 168. Fountain Hills is at 166. If you look at this month, everything's still increased. It just sort of all these chess pieces are moving around on the board, right? So, Fountain Hills was doing great. It jumped down. Gilbert jumped over Fountain Hills, right? So, Goodyear, it took a little bit of a loss. Fountain Hills took a little bit of a loss. Tempe was negative last year or last month, and then now Tempe is positive by 18% of a change. Um, so this is really why the Cromford Market Index and contract ratios should be used a little bit more specifically to areas and to cities because we take the general, the average, and great, that gives us a general idea of where things are at. But you might be ripping in Chandler, but Maricopa is just struggling or Goodyear's struggling. So you need to understand what's happening in your town, in your neighborhood, in your subdivision. Watch those data points, collect them, map them out, and make sure, that informs you what your strategy should be. How many showings should I have? How quickly should I be selling? If I'm selling right now, how many competing listings are out there on the market? Every month, how many are going under contract? Are there 3 going under contract? Because then I have to be one of those 3 that gets under contract the next month if I want to sell my house and move on with my life. So this is why I love going down these rabbit holes and understanding this stuff, is because our predictions and our expectations can be tuned to what's actually happening around us. So it's a little bit easier to function in that space. So that's it for the Cromford stuff. I'll let Chris take off for the armless portion of this, and then if you're watching on YouTube, then check us out, subscribe, and then you can get these monthly updates, and it'll keep you in the loop. Till next time.